Okay, so the YouTube stream is live as well. This morning we spoke about the unicorn model, and I think it would make sense that if we follow specific rules, that if we get stopped out really quickly, like for example, we entered right here on that 5-minute candle. This is the 15-minute chart, but we basically got stopped out within 10 minutes. And this is only the case if the opening candle, that opening 15, 5-minute candle, whatever, happens to be a fake move, a Judas swing, where we, like always, when we say we measure our daily range, we sweep sell side below the 50% and continue into the initial trend direction. So only if we get a market structure shift to the downside, we still try the 2022 model because of the probabilities, of course. But if we get a market structure shift in the opposite direction right afterwards, so in less than, let's say, 1 hour, so I still want to see it inside this London kill zone. It has to look similar like this, pretty much like a little W, but with the sweep. Same way as we saw it over here on Tuesday, if I go to the 5-minute time frame. Same thing happened here. What happened is we swept sell side liquidity below the 50% when right at the opening, and then we can with 99% likelihood say that if we just place this Judas swing immediately after we took sell side liquidity, right here we took sell side, and we took sell side when? Right after the open. Okay, so we still play the short, obviously, and we accept the loss because, yeah, probability is there that we will not get the unicorn setup. But if we get it, right here, market structure shift bullish. Let's put that lovely unicorn in there. Then I think it would be fair enough to play it to, yeah, basically for us at least to get back to break even. If you know what I mean. That should really be a main objective. It's not really about making profit. And most of the time, once we have the confirmation that this is the Judas swing, once we get the close above here, within our kill zone basically, this is the New York kill zone with the New York open, delivering the fake move. At this point in time, we still expect the low to be taken, really. But until we're proven wrong, within that same session, so right here at 10 a.m., so that's less than 30 minutes, we got the new market structure shift to the upside. We simply draw in our breaker block like we always do, and we draw in our fair value gap. We enter somewhere in that area and take the long. I mean, it doesn't matter if we just take a scalp, because at this point in time, I'd say the probability is around 90%, 90-10, basically, with high odds in our favor that we're at least gonna take, yeah, I mean, on Tuesday it was pretty obvious. I even caught it on the live stream, the previous week's high and the previous day's high. So talking Monday's high and Friday's high. Right here, that's where we had the confirmation. We took that liquidity, fake move, trapping people going short. We've been trapped as well. It's okay, we take that. But we know better afterwards, once we get that confirmation, still within our kill zone. So I do not want the market structure shift to happen. Like, for example, right here, we had our long model. We got our entry, but we never got our, yeah, how do we say that? Expansion move to the upside, what we expected. Instead, what happened is we continued lower eventually. But this, I wouldn't count this as a unicorn setup because it's happening outside the kill zone right here. Do we see that? Right here. We take this sell side. So theoretically, using that same approach, we would look for the lowest down closing candle right here as our breaker block and expect a short from here. But we don't do that because the time between our low or our market structure shift and the new market structure shift is more than 4 hours away from each other. Compared to here, market structure shift right here already on this candle, new market structure shift is just 30 minutes away, 2 15-minute candles. So in that case, I think it's appropriate to actually play the market structure shift. Here we swept sell side liquidity below the 50%. So we want to continue into this buy side liquidity, but in order to stop out some of these longs, we sweep sell side below the 50% of the entire daily range. Because we are already in a premium. We already took the London high and the Asia high right here and right here. So to continue up higher, we simply just can't pump up. We have to stop some traders out, accumulate some more to then continue higher. There's really no way for us to tell when it's going to be a unicorn setup, when not. The probability is always there for it to be one, but at least we have a plan B in case plan A fails, like a little fail-safe method. We still will have some losing trades like these ones right here, but right here we can at least compensate for our loss. Because then we have the confirmation for the unicorn. Right here we had the confirmation for our bearish market structure shift. Make this a little bit smaller. Within the same kill zone, we get the bullish market structure shift. And pretty much the same thing is what happened today during the London session. Let's see what's actually happening with price. So initially we got the market structure shift short. We had all that confirmed, but we immediately got stopped out. And we also mentioned it on Discord right here inside the... Oh, hi guys. Inside the trade ideas section. And also on the live stream during London. Potential unicorn model like we mentioned on the live stream. Without me, equal highs above, equal lows below. Then take it. But yeah, I will keep track of these unicorn setups. I've been doing that right here with Bento Book. I've created a little journal, unicorn model journal, where I keep track of each and every unicorn model with its specific data between the first market structure shift and the second market structure shift, the draw on liquidity, the entry times, to use it as a little fail-safe method, because we entered short right here. We have the valid 2022 model. Let's say even if we just have a 50% probability that it's going to play out, I'd still take that, knowing that if I get stopped out quickly and we don't just play around here forever basically, and it's not playing out, then I can play the reverse card, place my entry on the breaker, and at least go for a 1-to-1. That's the wrong way around. Let me do that again. Say we enter always on a breaker, stop loss at the low. At this point in time we should know this is a protected low, because we do the same thing again. We measure from our low of the day to our high of the day. And what did we end up doing? We sweep sell side below the 50% with our market open, London open structure shift right here. Where do we have it? Yeah, right here. We sweep that sell side below the 50%. We try to short anyway because the probability is there, and eventually with the proper risk management we are gonna get profit. But right here we got that immediate confirmation that we got fooled, we got trapped, it's okay, we accept that. Now we have equal highs and our previous day's high buy side sitting right here. And then switching to the 15-minute, we even had a fair value gap and a order block down here. Entry on the 15-minute fair value gap below the breaker block. Target a 2-to-1, and we could have even made some profit. Ending up here, we even had SMT divergence within Q. But yeah, that's already getting us to current price action. So yeah, just gonna refine the unicorn model to make it work better with my setup and my model. So we want to see the exact displacement after the initial displacement. And it's important that, it also happens around the open, because then we can, we have higher confidence that the opening was a manipulation move to trap traders short. And with the open, we need that displacement in order for it to be a unicorn setup. We still try to short, but if we get that immediate confirmation, we know what the target is, likely the previous day's high, or at least this equal high buy side, like we outlined it on Discord. First target hit, equal high buy side, and eventually the 2-to-1 right at the previous day's high. And this way we can really be smart about how we deal with the unicorn setup. And another case would be if, let's say, we see the exact setup and we only sweep with a wick. So imagine We didn't shift structure here. We only swept all these lows with a little wick right here. And then we get the immediate displacement to the upside. Also at a reasonable time, 3:30. Then yeah, we could play it along without having to force ourselves to always take a long coming from the low of the day, because we understand how price is moving from external to internal liquidity. I hope that all made sense. I'm gonna make a video specifically about how I'm going to play the unicorn setup. But yeah, that's basically gonna be it. So let's just wait. We have 4 minutes until the New York Open. We made a higher high on NQ. 9:05, 9:15. I go back to the 15-minute time frame. On a 15 or 5-minute time frame, we get our market structure shift from a high of the day, high of the week up here. We have equal low London sell side, Asia lows, lining up perfectly with the opening price for today. And yeah, that looks much better. So we have our market structure shift. If we get to close below here, we try to short. If we get immediately reverse, we can, yeah, like I said earlier, basically play the Uno reverse card and continue higher with price action into the daily bearish fair value gap up here. Now that's a 1 hour bearish fair value gap before we actually end up taking the SPY side here at 443.75. But like I said, we have been pretty bullish. What we could see today, what we have to be prepared for. Always be prepared for the loss. We measure from the low of the day to the current high of the day, sweep sell side below the 50% right here, and still continue further to the upside. So if we get the market structure shift, always be aware that just because we saw the 2022 model doesn't always mean that we will continue to the low of the day. Yesterday, we played it perfectly here on the 5-minute time frame, also on the stream. From a high of the day, after taking out a higher time frame point of interest, higher high, higher low, higher high, market structure shift, fair value gap, bum, hit eventually 4 standard deviations if we measure our last manipulation leg right here to the upside. 3.5 standard deviations. Is that the last manipulation leg? We formed a high, a higher low, a higher high, a higher low. Right here, that's how I had it drawn up. We hit maximum standard deviation, and from here on we started the market maker buy model, where we started to respect bullish fair value gaps. And how the way I play it basically on paper trades, for now at least, still practicing. The market maker buy model is, I want to see a couple of confirmations before I switch over to the bullish bias. Right here, just taking that first bullish fair value gap is not what I do. I would wait for it to respect that first fair value gap, disrespect some of the bearish fair value gaps that we have here to the left, and label them as inversion fair value gaps, and then much rather play the inversion that's overlapping with a bullish fair value gap, mitigation blocks, and simply target maybe the previous week's high for a little scalp. But why make it so complicated if we already have a pretty simple setup right over here to the left with a fail-safe method? So in case we immediately get rejected, we can always play the unicorn setup. All right, we made a higher high. Let me go over to NASDAQ 5-minute time frame. 9:15 and 9 a.m. is right over here, and 9:15. Okay, so we do not have SMT divergence at the high yet. At the opening, which is going to be in 3, 2, 1, I would expect the previous day's high on NASDAQ to be taken, and then we could end up with the SMT divergence that we need. So I'm going to log into the TD accumulation zone account for this 66-day challenge. Right here we see we already swept that low. On NQ we already took the previous day's high, just like anticipated. It was the most obvious buy-side liquidity pool that was available, so not hard in guessing that. We have our bullish fair value gap. and the 8:30 opening coming in perfectly with our market structure shift. SMT divergence right here at the open. So we wait for that 5-minute candle to be closed, and we could start setting our limit order right here. 3.5 points, but we want to make sure that we are aware of the option that we could simply attack some sell side and do what we did during London, immediately displace and continue further to the upside. That's always an option, and yeah, that's why we spoke about the unicorn model here at the beginning of the stream. All right. Look, buy side, we don't have that SMT divergence anymore with NQ. Sorry guys, I'm not watching the Discord chat right now. If you have any questions, I will get to them when there's less action. Well, actually, we have SMT like this at the 9:30 opening candle, but it looks ugly. We know it's there, so can deal with it. Higher high, higher low. We could also use our indicator, ICT all-in-one, to show the higher highs and higher lows and the market structure shifts. But I don't want the indicator to replace all my work. It's here to make my life a little bit easier, not to completely replace me. Market structure shift. If we get the confirmation close below, higher low, higher high, higher low, higher high. But like I said, we do not want that. Let's take a look at the regular trading hours opening gap. NQ also about to displace right here after making this higher high. So we can label this as our SMT divergence bearish after taking a higher time frame point of interest with all the sell side below, all these relative equal lows. Our breaker block would come in right here, consecutive down closing candles, basically all these candles. We have to wait for the next 5-minute candle though to get a maybe a better bearish fair value gap. For right now, that's by the way our regular trading hours opening gap. We open up at 9:30. That's where we closed yesterday at 4:30 p.m. So we want to make sure that this is not entirely filled and that we do not sweep sell side below the 50% ideally. This is the 50% I'm talking about. PD array before we actually get our entry, because there's still a potential that this 9:30 opening move happens to be a Judah swing. More often than not, once we see that 9:30 candle to simply just sell off. I mean, it's reasonable. We're doing it from the high of the day, but we just want to be aware that there is the potential for a fake out Judah swing, the way we're simply selling off here. So let's see. 1 minute to go, I think. A little bit of time to go over to the Discord chat. Some people sent me direct messages. Ah, fuck me. I've been talking and talking, and I'm not sharing my screen here on Discord. Well. Yeah. That hurts so much, you don't believe it, man. Oh, it's so well with the analysis, talking about the unicorn setup. So unfortunately, if you want to watch all that, last 20 minutes basically, it's on YouTube. You can replay that once we are in our trade. But, well, now it's there, I guess. That's a real bummer, honestly. I've been talking so much. I've been talking about the SMT divergence here with NQ, and then we're likely going to target the previous day's high. We closed below, so we shifted structure on both NQ and ES. We wait for our bearish fair value gap to be formed though. We have a inversion fair value gap up here. And our breaker block right here. can see that's perfectly overlapping. If we only use the lowest down closing candle, we still get, no, we don't get overlap, so let's leave it like that. Ideally, wait for this candle to close, place our limit order right here for the continuation lower, ideally. If you like to scalp without waiting for the proper entry, place your order right here on the breaker block, stop loss above this high, target at least London sell side for a 1-to-1, 1.3, 1.5, or 2-to-1 all the way down here. Remember guys, we are at the high of the week. So we could get a decent retracement. Oh, come on, I don't like that at all. I want this candle to retrace ideally, but let me get rid of some stuff here too. So we might not get that opportunity. That's our breaker and fair value gap and order block for the unicorn setup during London that we caught during the early live stream this morning. Also here on Discord. Again, sorry guys for messing that up. It's just annoying for myself. Trade ideas, we've talked about the unicorn setup right here. Got stopped out on the short right here. We entered on this bearish fair value gap after the market structure shift on both the 5 and 15 minute time frame, but immediately got stopped out. This is when we know that the unicorn setup is basically in play. Hit all our targets. That was all done, and right now I'm keeping track of the unicorn setup right here as well. The data between the initial market structure shift where we played a 2022 setup and yeah, the second one where we play the unicorn setup. So we have some sort of a fail-safe method. Market is just selling off. NQ doing that same thing. Still the fair value gap here on NQ looks much better. We place our stop at the high, target the low of the day. Because right here, if we get a bearish fair value gap, we could enter with the market right here on the breaker block. While on ES, look at this humongous bearish fair value gap that we would enter on. And our humongous... fuck. Well, at least the analysis was playing out. I expected price to drop. I didn't want it to drop so much. So really, NQ shorts are superior at this point in time. We also have the bearish SMT divergence backing it up. Let's see if we immediately take that sell side. We scratch the idea. But yeah, right now this would be our fair value gap entry right here. Let's take a look at the risk to reward. In 1 minute we could set up, that would be a 11-point stop loss. So I think I would still take it, but only with micros, of course, because yeah, for risk management we can't really do better. Maybe scale into the position and secure most at the low of the day. 2-to-1 would bring us back down to the VWAP and the previous day's low. I'm still gonna play it on ES because I simply play ES on this challenge. But for you guys, I mean, yeah, I'd simply set my limit order right here on NQ at 15,390.75. Open up the micro chart. Low hanging fruit entry. Stop loss at the high. Trade limit order. $250 risk. Yeah, we're gonna use 4 micros here. And we're gonna sell. Close right on the midnight level here on the micro. On the mini, we closed above it. So let me quickly switch my accounts to my other Apex funded account. 455, no, not this one. Connect this right here. I'm gonna sell 2 right here on that low-hanging fruit fair value gap, and 2 right at the 50% of the bearish fair value gap. Let's go over here to the settings and use the midline. On the funded accounts, I'm gonna stack the positions because it's unnecessary really to get a entry that's so low. So one limit right here, and the other one I want to put it right here on the breaker. So if we get filled up here, that would be cool. I'm gonna add 2 more buy stops. Up here, and yeah, gonna leave it like that and switch over to the other fund account. Do the same thing. We're gonna sell to here at the same price level. Yes, it is. That's great. We're just gonna sell for here. Let's not overcomplicate things. Go back to this one. 2 to 1. Keep it simple. That's the plan. We have our fair value gap. We have our breaker block. Don't care how much we retrace. Keep in mind that this could still be the fake out move for the London Open. We have power speaking later on today, so who knows what the market is really up to. I am just playing the probabilities, like every trader really should, in my opinion. Let's hide the micro chart. We do not care about that. We set and forget. I'm gonna secure partials if we hit the targets. At least here, right? That would be my lowest hanging fruit target. Keep in mind, we spoke about it at the beginning of the stream. 50% of our entire daily range. We swept sell side below, we swept sell side below, we picked up stops, and like yesterday, we could really bounce off that midnight level. Was it yesterday? Now right here, midnight level came in right here on this candle. We had our Judas swing to the downside, bouncing also off our midnight level, and then this placing. The only difference to Tuesday, really, in my opinion, is that we are at the high of the week. Right up here, we're coming from the high of the week, and that we already took out the previous day's high. But still, be open-minded. Even if it's a Judas swing, I think we could still play the opposite side and trade another unicorn setup if we get it. I'm not sure if that's going to be very likely. Like I said, we can take a paper trade here on NQ. That Apex 50k is already done. Now, come on. Create account. Apex 250k. That's a new challenge. That's just the way how I practice on my paper trading accounts without putting anything at risk. 250, 1, 2, 3. Create. And we simply risk 1%. No, that would only be fucked up. 0.5. That's all we can do. Sell 2 minis. Up here. Take a look at the DXY. The analysis from this London live stream. Everyone that has been watching the London live stream. Well, what did we spoke about this morning? I didn't draw this in just right now. This is all from the London live stream. I just got back from the gym. We spoke about the 1 hour change in the state of delivery. We had our daily bearish value gap. We filled that in completely. Yesterday during New York, we shifted structure right here. We made a high, higher low, higher high. And we displaced below it, leaving behind a bearish value gap on the 1 hour chart, paired with a breaker block right here on the 1 hour chart. We continue lower, leave relative equal lows behind, which are going to be the next target. And what did we do? We opened up on the new daily candle, and we spoke about this being a 3-session setup where we accumulate during Asia, we manipulate during London, not like that, like that. We manipulate during London 6, 7, 8, and we start distributing during New York. Right here. Accumulation, manipulation, distribution. We spoke about this. If you want to Like, yeah, see the proof. Just watch the live stream recording on YouTube. I've already uploaded it to the YouTube channel. Where do we have that? Your channel. Should be the most recent upload. That's what we wanted to see on the DXY. Yeah, get funded using the day 4 of 66. So it's in there. VIP members, you can back that up, that we spoke about that exactly that this morning. Yeah, a lot going on for years. Hoo-hoo. Interesting. I like to see, yes, Ulrich mentioned it, it's okay, you're multitasking like crazy. The move reaches almost midnight open. I will not take the MB because the move is already done. Nope, don't agree. Stop thinking. Trading is simple until you start thinking. DXY is selling off very strongly. ES didn't hit our entry. Did the micro? Let's see. No, micro didn't hit our entry either. The move is not done yet. The probability is there. We have our 2022 setup. We still have all the sell side liquidity below, so there's no reason to assume that the move is done at all. The move is done for me if we take out the low of the day. Then I will cancel my limit orders. And yeah, even if I'm wrong, I can still play it along with the unicorn setup if I get the opportunity. Otherwise, we followed the rules and had a good losing day. Better than a bad losing day where we try to force anything and yeah, basically gamble. The DXY keeps on selling off. That's pretty good. Where's my little friend Kimmel? No. Gonna do that later. Where do we have the live streams? Selling off very strongly. Yes, let's mute myself here. Pretty annoying. Thanks, Marley. I just got that message. Make sure you like the stream here. It really helps at putting it out there. DXY keeps on selling off. We have that power of free concept. We've spoke about that. Let's take a look at NQ. Did NQ give us the fill? No, it did not. ES keeps on going lower with the DXY going lower. So don't always look for inverted correlation between the DXY and ES. I think it's more about the technicals. When you do backtesting, you also don't compare the DXY with ES at all times. You can do it if you trade Euro US dollar. We spoke about it during this morning. We spoke about the head and shoulder setup right here. Left shoulder, head, right shoulder, playing them perfectly with the 2022 reversal model inside a higher time frame point of interest. And if we head over to EU, market structure shift, inefficiencies, what did we tap? The lowest inefficiency down here. Did we tap the breaker block? No, we did not. But well, we hit that lowest inefficiency and we immediately continue further to the upside. That would have been the play. Bullish share value gap, stop loss right here below the slope. Target 8221. Let's see how that goes. It should be good. From the low of the week back to the high of the week, maybe even. Vice versa for the DXY. From the high of the week down to maybe the low of the week. Or at least yesterday's lows. London low, Asia low, and the low of the week, New York session lows. I still have to leave the order on until we have the sell side liquidity cleared. Then it's just a missed opportunity, really. Let's see if we have any questions here. No new questions. We have a message in general chat. Yeah, you know, that sucked big time. But at least it's recorded on YouTube. So nothing lost here. Let's see, 4410. Ease, can you send me the link again for the bookmap live stream? Then I can put that up. Can't really search for that right now. Cheers. Let me take a look at bookmap. That's become a data scientist. I think we are, really. Oh, a lot of limit orders at 4405. A hell lot. Do you see that deep dark red? 361 contract short. Crazy. You had 4410 even more. So yeah, below, very less liquidity. Above, so much liquidity, almost crazy. 4405, that's exactly where we want to get filled. So yeah, just gonna leave it there. We are holding at the midnight without taking the sell side. Yes, this could still be a Judas, but who cares? We're not here to decide if it's going to be one or if it's not going to be one, because that's not, I don't know, most of the time that would just be based on a gut feeling, like we had it yesterday. We also already retraced pretty deeply below the 50% of the entire daily range once we got the market structure shift confirmed. Right here, we already took sell side, and then we got the rejection right here and continued lower. The possibility is always there, especially when we get a strong setup like this right at the open. But I think it's worth playing it. We have the market structure shift on the 15 now confirmed as well, waiting for the retracement to happen. Like I said, I can be wrong. If you don't like the setup, don't take it. That's just my opinion. I think, yeah, there's nothing really to lose here. If I get stopped out immediately, I can make sure that I simply play the unicorn setup and target daily buy side liquidity above here. If we manage to displace orders, that would still, off the breaker block right here, net me 11 points when to basically break even very easily. So yeah, both ways, let's say at least I won't end up losing in whichever direction it's gonna go. So it's either gonna be the New York AM session, continuation into sell side liquidity, or the AM session due to swing to the midnight, displacement, presenting the unicorn setup, targeting really that daily buy side liquidity or even more, depending on how bullish we are. NQ looks super bullish here, also bouncing off the midnight, so the potential is there for the unicorn setup with the DXY heading lower. Still like to play, nothing wrong about it. But you do you. And I do I. I do me, basically. Cheers for that, guys. I was in the zone when, at the beginning of the stream. Then even, just thought that people in the live stream are here going nuts and sending so many messages. DXY continuing to head lower. NQ really pushing here now inside that breaker and all that stuff. Our stop is still at the high. We already cleared the previous day's high. Take a look at our book map. Right over here. Still most of the liquidity is being pulled at 4405. 415 contract short now. It should act like a magnet. 4405. That's around the 50% of our 5-minute bearish value gap we enter with the low hanging fruit. I'm fine with that. There's nothing wrong. Target at least these 10 points towards the low of the day. And yeah, really, that's just me. I would be more personally annoyed if I say that I'm not entering on the setup based on a mixed gut feeling and not taking the chance of playing the probability, what I have been doing for the past 4 days on live streams. during London session on Discord and during New York, yeah, here on YouTube and Discord. So yeah, no point for me to not risking it here. Don't care. Would suck more missing out on this after, yeah, getting it right than getting stopped out. Getting stopped out, I can't really avoid that, but yeah, deciding to not take entries, I can avoid that. So let's see, 2 new messages on Discord. Guys on YouTube, if you want to watch on Discord today too, without the ads and without the delay, there's a link in the video description below, right here. Join us on Discord, and then all you have to do is grab the community row, accepting, yeah, the rules and the disclaimer right here. No, welcome, that's where you land. Click on verify me, and then you can join us right in here on Discord in the live stream section. DXY keeps on selling off, just like we thought it would. Charts don't lie. We are in the distribution phase. NQ is pushing up higher, while ES is still struggling here. I wonder why. Let's take a look at the 1 minute here. This could be a new potential inverted head and shoulder setup that's delivering through all this 930 run here to the downside. But there's always 2 sides to the coin. The only time where I'd say it's really 90-10 in our favor would be if we immediately displace this and could play the unicorn setup of this newly formed bullish breaker block. And then eventually all we did was sweep sell side, like we said from the beginning of the stream, 50% below the 50% of the daily range, without ever touching the London sell side, at least just yet, or the Asia sell side, the open, the low of the day, whatever basically. Then we could still play it along. We have minimized our risk. We use micros, 250 bucks. That's what I'm okay with risking on whichever trade might come. And if I'm wrong, I can still play it along to make sure I break even. And also to make sure to not miss out. Stop loss we will see once we get there. If we get there, we've filled on all our accounts, I think. And really when trading, we, yeah, I don't know, have to get rid of the, maybe not fear, but yeah, basically the fear of losing. And maybe also think a little bit less. Otherwise, if you like to overthink stuff, you might just as well, yeah, trade based on your intuition. And if your intuition says that you think it's gonna displace here, and yeah, basically do what NQ is pushing here to do, going back above the previous day's high, then don't take it and go long. Go with your intuition. But if you dedicate your account or your, I don't know, your time basically to a specific model, then fucking take it. And don't overthink it twice, or simply execute it, follow the plan. And if you're wrong, we have the backup plan with the unicorn model. Nothing can happen to us. Already anticipate a losing trade. And yeah, it's as simple as that, really. We have power speaking at 2 p.m, but it's still a little bit of time away. I want to see eventually the sell side being taken. We have filled on our accounts. NQ already took the high. Like I said, the potential is there with the DXY dropping like it's right now. We have more SMT divergence. with NQ having taken that high. Right here we can drag this SMT divergence line out. Hit the 50%, we hit that big fat sell side liquidity pool here on ES, buy side liquidity pool. We still have now 296 at 4410. So we hit all these orders and they put new orders in up here. Now they have been here the whole time at 4410. Right up here. Open up the Discord, heard a message. Yeah, exactly. Well, with your backtesting, let's say you do orders in replay mode and you look at the 2022 model, depending if you use the bar replay mode or if you just, look for the market structure shift, the fair value gap entry. Yeah, if you don't use the bar replay mode, you already know what's gonna happen, and subconsciously you're just gonna draw the trade with the perfect entry to make it work. Yeah, that's why we collect all these data points and journal them very thorough inside our Bento Book trading journal. Right here, if I head over to the trade day account, we do live forward testing. See what we can achieve within these 66 days. So far we had 2 wins and 1, 2, 3 losses and 1 half loss really. We only used half the risk on Monday's London live stream. Yeah, and see if we can eliminate any potential entries. Like I said, really detailed here when the Asia low has been swept. Previous day's high as the point of entry, entry times, day times, sessions. Also gonna add news to all that. How big our stop loss was right here, 3.5 points, 7 points. Today we have the biggest stop loss that we have taken so far, but that's not gonna stop us. It's that simple. NQ coming back. Yeah, NQ basically already set up for the unicorn model right here. We now look at our highest stop closing candles as our new breaker block. We have our inversion fair value gap, old inversion fair value gap. Basically looking forward to play this long in reality. You can see that the DXY is pulling back. That's why we likely see us getting rejected here. And which could lead for us, at least hitting the London equal lows. So, right, we're in with 4 positions, with 4 micro contracts. I'm gonna get out once we hit I want to really do the low of the day. London open. Now let's check out our book map. Oh, we're just gonna let it rock. Doesn't matter what happens. Still almost no sell side to the downside. Let's have a look. 189, 17, and 200. Still have that big chunk of orders right here. 289 or 670. What's that? Right at 4410. Right, this one here. 4410 below that. We'll see though. So that's the trade day account. For the trade day account, I'm simply gonna let it rock to 221 because we're testing a Fury here. But for the funded Apex accounts, I'm gonna play it a tiny weeny little bit differently. That's already done. We're in on our PA Apex. I'm gonna secure partials. Okay, that's low of the day. That's London sell side liquidity. I'm gonna secure. No, where are we gonna do? What are we gonna do? London sell side seems pretty good for a partial exit. No, that's less than 10 points. Screw that. We're gonna go for 10 points and buy 1 micro contract down here. And at the low of the day, we also make sure, yeah, that we get paid. We get another one out down here. Buy one. Make sure we set our buy stop up here as well, in case we do go back up. We're back at the midnight level. Let's see if we hold support here or can break below now. Buy stop goes back to our old high. So we get out with 2 once we hit all that sell side, and we leave the runner for our 2-to-1 risk reward ratio, at least for the funded accounts. I think that's the best option for the trade day account, the challenge that we're trying to pass within these 66 days. It's 2-to-1 or nothing, simply. Don't overthink it. Don't worry. With trade day, we do not have intraday calculated drawdown, so yeah, nothing to lose really. 10 points, 10 points, 10 points. First micro comes off right here. Which trade of 8 account is this? That's the one in drawdown a little bit from the London session loss. Wouldn't that suck big time now if we said we're not gonna enter here because we're scared that it's gonna be a loss? I think it would. At least for me, buy one limit, and we simply set it at our 2-to-1 from our fair value gap entry for the last runners. Buy 2 limit. Buy 4 stop. And there we go. We took the London session equal lows. We took the Asia sell side liquidity. We took the let's go low of the day. Told you. It's worth the risk. Who gives a damn? Okay. We secured our partials. We're at the low of the day. If you want to, you can move your stop loss to break even. I think I will do that for at least the Apex funded accounts because of the trailing drawdown. We got our entry. We could have gotten a better entry at the 50%, but we're content with enough. We got our setup. Bit unfortunate setup here. And Q said, fuck you. That's one of the reasons why I trade ES. Stop loss goes to break even, and we switch over to our other PA Apex account, and that's how we trade, baby. We play the probabilities. Last partial comes off down here. We're fine with that. Our stop loss for the funded accounts is just at break even. So we can pretty much not worry about them anymore and head over to our trade day account, because that should be also running in profit. We don't take partials on the trade day account. We simply wait for our 2-to-1 to be hit to, yeah, I don't know, prove a point. But we can see we took that sell side liquidity now, and Q hit the Asia sell side and the London sell side with even more bearish SMT divergence. The market is really volatile today, with Powell speaking. I would still expect it to continue a little bit lower. We will see. Can check our book map, because we still have, fucking what's happening. So right here you see that how from this thick red color it lost redness, and now it's yellow. They pulled orders here. Price is pulling back, we see that, and market buyers are entering the market, which is acceptable after such a move to the downside. We took out all these limits down here with the low of the day, so we made sure we got paid on the funded accounts for our time. Let's see if we have any questions on YouTube. What do I trade now? Yes. We tried in Q with a paper trade, but for the funded account, and for the challenge, we only trade ES. secured partials right here at the low of the day. On the trader account, we simply gonna let it rock to a 2-to-1. Let's see if that trade is gonna play out. I think over the long run, even if we just maintain a 50% hit rate, I think we should end up profitable over the 66 days and maybe even score a payout. So yeah, we're trading ES here. That should be fairly obvious. I hope you guys can see that ESZ. That's the S&P 500 December futures contract. Head over to Discord. Yeah, exactly, day trader. You've been here for 1 week now. And we've been doing a pretty good job catching these setups without any hecticness, without any rush, without anyone screaming or yelling. Just us playing the probabilities. Right here, this was another one where we took very nicely during the PM session. Yeah. Yeah. Guys, if you have more questions, feel free to ask me. Good morning, or yeah, good morning, Agent Smith. Continue to head lower. Our 2-to-1 is still down here, also on the mini contract. Is that correct? Yep, right here at 4380. Let it slide to the downside. NQ continuing lower. A little pause at the midnight level with huge SMT divergence. So everyone trying to play the 2022 model, wrecked. Everyone trying to play the unicorn model, wrecked. Ouch. So we will see for how long this pullback can continue. Overall, order flow right here on the DXY is bearish. That's why we secured partials on our funded accounts right here at the major sell side liquidity pool. We're gonna leave a runner, our stop side break even for the funded accounts for the challenge right here with trade day. Like I said, it's either a win or a loss. Who cares? Momentum is bearish. Order flow is bearish. We come from the high of the week, high of the day, high of the month, basically, even. And what do you want to do? You want to sell high and buy back lower, or buy low and sell it at a more expensive price. No. Guys on YouTube, I don't really see you joining the Discord. I wonder why. I mean, here on YouTube you have the ads and the delay of 1 minute. So if you want, join us on Discord. The link's right here in the comment section in the top chat. And yeah, all you have to do is you land up in the welcome chat right here. You click on verify me, and then you're verified. You're part of the ASAT community, and then all you have to do is come up here into the VIP member area. And yeah, for today you can join the VIP live stream and ask me questions right here. We took the sell side. NQ didn't hit the low of the day yet. Already pretty happy with today. Can't really complain. We had our 1-to-1 risk reward. We secured partials on the funded. We took the loss during London, really. Well, that's hindsight. Should have played the unicorn setup that we spoke about at the beginning of the stream. But it's a good lesson to have learned. I will keep track of them, forward test them. Once I see them, I have my set rules. I will make a new video about that very soon. And then see how it goes. Use it as a little fail-safe option that we can use to compensate a potential loss. 5-minute chart, 9 a.m. fair value gap. Let me take a close look here. 5-minute chart. We're on the 5-minute chart, 9 a.m. fair value gap. Why didn't I choose that fair value gap? Hang on, let me read that question again. That formed is a nice 2022 model, right? But you did not try to take the previous swing fair value gap, which broke the low after previous swing fair value gap, which broke the low after sweeping the liquidity. Can I ask you why? Let me see. We took buy side. We made a higher low, made a higher high, and we displaced. Right in here, we don't have the displacement, so no reason for us to take the short up here. I mean, we've been streaming since 9-10 roughly, when we had this run to the upside, and we spoke about the possibility for the 2022 model coming from the high of the day, being above the previous day's high. And yeah, once we had the confirmation, we played it from the low-hanging fruit entry. I mean, yes, if you always want the best risk to reward ratio, you can place your limit order up here, but yeah, just don't be annoyed if you don't get filled. That's why I take these low-hanging fruit entries and I don't even set it at the 50%. I don't mind. That's how I backtest. That's how I forward test. We will see. I will, yeah, like I said, journal all of that stuff with my bento book and see how it goes. If I see that a 50% entry would work better in most cases, then I'll do that. I keep screenshots of all the trades in here. I can look at them later in the gallery view. If I head over to the trade day 50K, those are all the trades that we have taken so far. Can scroll through them, filter them by specific tags, and see if I can, yeah, improve my trading basically. And the executions I take. So really, this was no 2022 model. The one that followed was the 2022 model. Right here, where's the higher low that we cleared on the 5-minute time frame. Made the higher low on that same candle, formed the higher high. So we really first took that buy side right here, formed a higher low. So looking at the bigger picture market structure, formed the high, formed the low, broke the high, pulled back, held support, broke the high one more time, and then we displaced, leaving behind the inefficiency. We entered on the retracement, took partials on sell side liquidity. Yeah, and for the forward testing account, we simply wait for the 2-to-1 to be hit. So there's no 2022 model on this 9 a.m. fair value gap. I hope that answered your question, Omar. Take a look at Bookmap. They're putting up some liquidity again. Okay, now the stream updated. 220 short at 4,400. Not much liquidity here to the downside, if we're being really honest. Also not here on that higher time frame. We continue lower. That's nice. Let's take a look at NQ here. NQ hit the original bearish fair value gap paired with a new bearish fair value gap, but NQ is really messy here. I'm sorry for the NQ traders. They likely had a stop out today, no matter which direction they tried right after the opening, unless they are tick scalpers. The DXY is pulling back further. If we check the 15-minute time frame, where could we bounce? We could really bounce anywhere from here. We could bounce or continue further to the downside from this breaker block right here, where we form more old support being turned into resistance. PM low, equal low sell side. We could even drag it out further and see if it's an old support level. Old support, bounced off it during Asia. Break below, use it as resistance. We have the midnight level right here to continue lower into the Asia sell side and continue the distribution really. Could get rejected from the London lows now that we are finally below them. We could retrace 50% of our manipulation move and then continue lower. 50% comes in above the midnight level. We will see. But yeah, that's the best play so far. Good morning, Shoes here. Nice to have you back. Like I said, if you want to join the Discord live stream without the ads and all that stuff, then make sure to click this link right here. And yeah, simply join us on Discord. It's open for everyone today. We took these two equal lows. Want to see the continuation. We close back below the previous week's high. Back below the midnight level. Once we actually, no, that's the opening, I think. Yeah, that's the open. Right here we have the new day opening gap and the opening level. All those lines are made by the ICT All-in-One Indicator. We close below it and we use it as resistance to continue lower into these equal lows. We will see if we hit the 2-to-1. Like that. Not much we can do. We play the probabilities like we spoke about initially when placing our entry. Imagine we wouldn't have taken that trade and we see, okay, we hit the low-hanging fruit targets, being the low of the day and London equal low sell-side liquidity. And yeah, right analysis, but something made us think that we're not going to take the trade or that we shouldn't take the trade. And that's not really something quantitative, something we can rely on. If you trust your intuition so much, then yeah, really, you don't need to force yourself to trade a model. If you really, yeah, I don't know, practice your intuition well and you develop a good gut feeling, you can also trade profitable by just relying on that. But if you want to stick to a model, then the best solution is to simply stick to it. If you're wrong, you're wrong. If you're right, you're right. But you want to make sure you eliminate the problem, which is most of the time you thinking too much. So we try to keep it simple. That's what we set out to do during the 66-day challenge. Okay, now in my opinion you did fine. It's just that I interpreted that as a lower low since I thought the black candle was a swing. This one right here. Now usually the way how I define a swing low or a swing high, or at least a short-term high, short-term low, is let's do the scenario for a short-term high. For a short-term high, I want to see a lower high to the left of it and a lower high to the right of it. This way we can see short-term high, lower high to the left, lower high to the right, short-term high. Higher low to the left, higher low to the right, short-term low. Right here, lower low to the left, higher low to the right, no short-term low, no market structure shift, no displacement. Higher low to the left, higher low to the right, short-term low, displacement, fair value gap, entry. Take a look at NASDAQ. NASDAQ didn't take out the low of the day yet. The DXY is pushing back up, but could get rejected here. Continue lower to the Asia low, which could help the indices to move back to the upside. But let's try not to overthink it. We're in the trade. On our funded accounts, we're already secured. I was on Discord, but I needed some space, so deleted. But still sticking with your YouTube stream. Fair enough. Make sure everyone watching it drops a like. Really helps the stream putting it out there here on YouTube. It's also a share on my Twitter here quickly. Well, and this is basically what intuition trading looks like, where you just, yeah, trust your gut feeling. We see the high being taken, you're on the 1 minute time frame. You have a gut feeling that this is just a manipulation move and you sell it short, you sell it long because you think it's going to go into the SPY side. You secure profits right here. Like I said, that's how you can trade as well. But yeah, otherwise, simply stick to your model and let it play out. It takes a while to develop that gut feeling and that intuition and also the confidence to trust in yourself. It's easier said than done to simply follow your gut feeling because, yeah, after a losing streak, you sometimes feel like, I tried both approaches. For me right now, because it's easier to teach, I simply stick to a model and try to prove that it's possible on stream without any tricks or shenanigans. So yeah, intuition is something that has to be learned. It's like, I don't know, maybe we have some soccer fans here like Cristiano Ronaldo or Lionel Messi. When they are on the field, they just play. They don't think about if they should, I don't know, do a specific trick here or if they should, like, I don't know, shoot the ball in the left corner of the goal or the right corner. With basketball, it's the same thing. They just play. It's they performing their art. They do what they do best without thinking about it too much, and that's really, I don't know, what it comes down in trading. What it comes down to, and with trading as well, you either stick to your edge and execute it, also not thinking too much about it, or also very simply, you trust your intuition without even a single second of second doubt. Simply, perform your art, enjoy what you do, and be profitable. Trust yourself. But it's harder, especially for the beginner trader, to do that. It's something you would practice on a paper trading account before taking it live, in my opinion. But yeah, that's just what I've learned over the years. And you can't copy or learn that from any other trader really out there. It's you that has to go through the process of trusting or developing that gut feeling, that intuition, to be able to do that. Until then, simply watch and study price action, follow your model, understand how price is being booked, and then the more screen time you have, the easier it will become for you to see or recognize specific patterns that you have seen 1,000 times before. You know how they play out at least 80% of the time, and then you just stick to your intuition. Hope that makes sense, and maybe someone needed to hear that. Well, all it. Nabro, letting you out some gems. Thanks very much. I should really consider your VIP membership. Appreciate that. Even if you have gut feeling, I think managing risk is too hard that way. Well, I know what you mean. I've been struggling with that same thing when I'm, simply just trusting my gut feeling. It's easier to, I don't know, how do I say that? To simply over leverage, revenge trade, and FOMO into stuff because, I don't know, you had that. You see that, you have your intuition, you have your gut feeling, but you hesitate with your execution and you're like, should I, shouldn't I? And then you already saw it move and you jump in late and then you're mad at yourself that you didn't listen to your intuition and your gut feeling. And you made a loss and now you want to recover that loss because your gut feeling was right, but you fucking it up, making it worse, blah, blah, blah. You know the drill, and then you over leverage trying to make back your loss. And this can very quickly end up employing your account. You know better, everyone knows better, but at these critical times, it's really hard to control ourselves, especially if we're just, trusting our gut feeling here, basically. Hope that makes sense, but it's possible to control, which might seem like the uncontrollable, but it takes a lot of work and dedication. You simply can't let it slip a single time because all that's yeah, between you and blowing away all your profits or even blowing the account is one bad trade basically that could start off this entire cataclysm of you revenge over trading, over leveraging, and boom, it's gone. And you open your eyes again after a quick blink and you're like, whoa, what happened? Who took control over me? We've all been there. So yeah, it's either you starting out, simply sticking to a model, a pattern, indicators, whatever it is, doesn't matter, doesn't make a difference. ICT, support and resistance, classical charting patterns. I mean, we spoke about it here on the DXY. ICT traders here on an hourly time frame saw the 2022 model inside a daily bearish point of interest or area of interest, daily bearish fair value gap, high displacement, fair value gap, breaker block, power of three concepts. They saw it coming. They might have been able to play it on the Euro US dollar like we anticipated. We didn't hit our 2-to-1 yet. We will see if that might still be hit. And classical charting pattern traders, they simply saw the left shoulder being put in place, the head, and the right shoulder, and they anticipated this entire move based on maybe a simple Fibonacci retracement. Above the 50% they buy, or maybe the 61.8. If we do it like this and use the ICT Fib retracement, quickly have to turn that around. Like that. We hit the 61.8. We also hit the optimum trade entry. Do you see that? Optimum trade entry here on the XY hit to the tick. And reverse. So whatever you do, we might have had a pivot here, a daily pivot, or maybe the 50 or 100 EMA, who cares? Like, there's no right or wrong. In the end of the day, you are the one making a specific method work. So just gotta stick with it. That's what I hope I can teach within these 66 days of consistency. And what also really helped me, if it wouldn't be my job to be active on Twitter to, I don't know, get some exposure and maybe also grow a little bit, then yeah, simply logging out of Twitter and ignoring it, not watching 10 trading YouTubers at the same time. Like I said, if it wouldn't be my job and see what's going on in the entire scene, yeah, I'd love to be able to turn it off or maybe reduce it to one, stick to the one, and one that's helpful, whoever that might be. If it's me, if you like someone else more, it's fine, really, and stick to that. But I don't know, most of the YouTubers out there, all they do is they put out ICT strategies, backtest like 10 trades, and they say that it has a 75% win rate. But then you do the work and you find out it's not a 75% win rate, and you waste all this time backtesting when the simple model is right in front of you. Someone's taking it live on a free YouTube live stream, giving you some good advice on how to manage risk. And yeah, I don't know what else to say, really. I'm really excited about adding the unicorn model to the playbook, basically. So what I mean by that is, let me hide the ICT all-in-one indicator here quickly, is that, yeah, basically all we're looking for, we're either at the high or the low of the day, let's say somewhere down here. Right here we have the daily high or previous day's high, previous week's high, whatever it is, higher time frame point of interest, previous session liquidity, previous day high, we already had that. We look for whatever happens before, we look for price to make higher highs and higher lows. Take out the liquidity pool, it could continue making another higher high after that and then start displacing. We get our market structure shift. coming from the high of the day, right here, that's the high of the new daily candle. We pull back and continue lower to sweep all these lows. And in the scenario where we simply continue higher after clearing the high of the day, maybe sweeping some internal sell side, let's say market structure shift looks like that, like we saw it on, I think, Tuesday. We get the 9:30 opening, we displace, we take liquidity, and instead of rejecting of our bearish share value gap, we simply displace again, and we initially, yeah, we take the loss right here on that 2022 model. But if this new market structure shift right here, the unicorn market structure shift, happens at the same time, let me put that in here, during the same kill zone, we can be pretty confident that the 9:30 opening move or the London opening move was a fake out or manipulation to the swing, whatever you want to call it, to the downside or to the upside if we would flip our chart here really. I'm just explaining the bearish scenario and now the bullish unicorn model right here. So yeah, we can be pretty confident that all we did right here was simply sweep sell side below the 50%, trap trader short, and simply move price into the opposite direction. What we do then, after having failed on our 2022 model, we can look for higher time frame point of interest, because obviously we do not want to take any more sell side. The day is bullish. We might have something else that's up here that we didn't look at before because we already saw our 2022 model. But once it's invalidated and we see the confirmation for that within our kill zone, within our 8 a.m. until 11 or 12 a.m. timing window, basically, we look for the new breaker block, which is the highest sub closing candle of this price leg. Expect support here. Ideally, we also have a new bullish share value gap that has been left behind in this price leg, and we simply look forward to trade the continuation from here into our higher time frame buy side liquidity pool, lower time frame buy side liquidity pool, previous week's high, previous month's high, and yeah, we are still able to catch the long even at the high of the day, if all that happens within a reasonable time. If, let's say, we consolidate for a very long time in here, we just move sideways, we continue making a lower low, pull back up, it's already towards the end of the PM session, or this is London, and we start New York, and then we get stopped out on our London short, for example, I wouldn't really look for the unicorn model. I want to see it happen within the same kill zone. I still need to collect more data on that. I'm doing that right now here with my trading journal, the unicorn model. I've got Tuesday and today's London session all journaled up in here. Market structure shift to the downside right here at 3 a.m. at the opening, immediately displaced with a unicorn market structure shift to the upside. I just call it unicorn because, I don't know, ICT called it that. He always comes up with fancy names, and I think it doesn't hurt. And we hit our previous day's high. And for Tuesday, it looks like that we anticipated the previous day's low to be hit of the bearish share value gap during the New York session. We were proven wrong, and we even caught that on the live stream, the entry of the fair value gap right here, continue into the previous day and previous week's high, and even daily volume imbalance. So we can immediately mitigate the loss if we're proven wrong within the same session, let's say within a reasonable time between the two market structure shifts, because then we can be fairly confident that all this was a move into sell side liquidity below the 50% of the entire daily range so far that has been established from the London low into the New York high. Because price simply, after hitting external buy side liquidity, simply can't go up forever without stopping out some of the longs that have been put in place that likely trade their stop loss below each and every of these higher lows. So right at the market open, what do market makers do? They stop out some of these longs, people selling their long positions, market makers able to load up their bags, fill up their positions because they trade big sizes. And what do they do from here? After stopping them out, people being long, selling into the hands of the market makers to continue further to the upside. And right here with the unicorn setup, I think we really have, especially if we have something like the previous week and previous days high just above us, sorry, and we invalidate the short with that new displacement within a reasonable time, yeah, I think the odds are really 90-10 in our favor. Like I said, if we have too much time between the two market structure shifts, I'd say it's lower probability, but if it's happening right away, we're most of the time pretty good. I keep track of that, keep forward testing it. I mean, I'm streaming these 2022 setups for the next 62 more days. We will see how that goes. And yeah, if we see the unicorn setup, I would still engage on it like we did on Tuesday. Today during London, I really missed the opportunity. But with that missed opportunity came, yeah, the knowledge that I have right now. We took it on Tuesday, this afternoon, or this, yeah, lunch hour. I really, here in Germany time, I spent a lot of time really looking at specific unicorn setups, setting up some rules for myself, really. And yeah, going forward to test it. So we continued lower below the low of the day, which is nice. We still didn't hit our 2-to-1, which is okay as well. We hit a 16-point profit target. So our shorts are running in profit. That's out of the question. But yeah, we still wait for our 2-to-1 to be hit. And Q didn't take out the low of the day yet, so that's still possible. Let's take a look at the DXY. DXY is retracing now on the 15-minute time frame. We can see that we've likely been rejected from the area we've talked about. Old support turned into resistance. If we just look at that lowest down closing candle, not perfectly, lowest set of down closing candles that kept holding support during the accumulation and the manipulation phase that we also outlined perfectly. Yeah, could be used to continue lower into Monday's Asia session low. No, Tuesday's Asia session low. I was confused here for a second. Here on ES, we also spoke about it on the weekly outlook, that the 50% of our entire pullback that we had after the pretty good rally that we had at the beginning of the year 2023 comes, or the 50% level of this pullback comes in right here at 4,400. And guess where we are at? We have all these inefficiencies from last week. We took out the previous day's high on Tuesday, Wednesday, and now on Thursday for maybe the last time today. And that's where our stop loss sits, so really not too worried about that. We will see what Powell speaking will do later, but I will simply stick to the trade. We had a daily volume imbalance right here. We had the overall 50% level. We had a daily bearish fair value gap here. Could retrace and use that into the daily bullish fair value gap maybe. After, yeah, one of the second most bullish week that we saw on ES during the entire year of 2023. Low from Q4, high of Q3 2023, 50% is this purple line. And guess what? We took that out, paired with the sell side liquidity, bullish fair value gap below it, kept holding support. And yeah, last week we had the most bullish week, second most bullish week on ES. And Q still failed to take out the low of the day. For the funded account, our stop side break even. For the trade day account, our stop is right now at the high of the week, high of the month, high of the day. We will see. Could get stopped out, could care less. I know that blindly 50% of the time I will hit the target. If the stop is wide, use micros and not minis. Yes, exactly. We've been through that, because with minis right here, we can't really risk 0.5% of our equity, because if we create a limit order here and just use one mini contract, we immediately risk 550, and that's, yeah, with the trailing drawdown and all that stuff that you have to be careful with Apex, and you also don't have the biggest amount of margin available. It's, you know, especially when it's once funded, it's better depending on your entry, especially if you take low-hanging fruit entries like I do, to simply switch over to micros, because with micros you can be pretty specific with how much money you want to risk, like we did right here. 0.5% of the 50k count is $250, and it immediately tells us that we have to use 4 micro contracts to risk 220. If we were to up that by 1, we'd risk still risk 220 for some reason. I don't really know why, but I think you get the idea. On the EU long, my target was the daily volume imbalance. Hit it nicely, but did not fill it completely. How big is the draw to fill it completely? Is it as well to a 4-hour? How big is the draw to fill it completely? On the EU long, my target was the daily volume imbalance. Let me take a quick look at that. So with EU, it's the perfect pair to use SMT divergence with DXY, because the DXY is pretty much the opposite, most of the time at least, to what we see on EU. They really go hand in hand most of the time. The only difference is that if we add the Euro US dollar here in a new price scale, you can see we can do these pretty cool pictures where we, I don't know, see the same movement but just flipped on its head. So if we invert the Euro US dollar chart right here, we can see that most of the time prices are moving alike. Let's zoom it out here and put it a little bit lower, hide all our drawings, and just look at the price action right here. And once we see discrepancies between the two, like for example the higher high on DXY and the lower high on EU, can be pretty confident that we have SMT divergence, which can be used as a confluence paired with a market structure shift, paired with a bearish fair value gap and only 1 hour time frame, like we saw right here. Expect our accumulation, manipulation move, 1 hour bearish fair value gap, breaker block, continuation lower. And so for EU, I simply take partials to answer the question. I will switch over to EU here right now. The setup is still in play. The daily volume imbalance, let me see which one you're referring to. Okay, I'm on the futures chart, so that might be tricky. I'm not sure if you're trading futures or if you're trading CFDs. But if you're trading CFDs, let's take a look at, let's use the Yuan chart. Daily volume imbalance. Don't really see one. But that's the thing with CFDs. Let me go back to the futures chart. As messy as it is. That's not really messy. Oh, right here, this one. Likely. Daily volume imbalance. Going back to the 15, we got our entry down there. If the DXY keeps on going lower, heading towards the lows we've outlined, then I really think EU shouldn't have a problem continuing a little bit higher. We took out the previous day's high. That would have to be a partial point. If you don't take partials there, then depending on your approach, of course, we even took out the not the high of the week, but Tuesday's high right here. We just ticked that area. We did also on the DXY, I think. And we could also use the Fibonacci retracement tool, measure from our high to our low of the week for the entire weekly range. So this is Monday, where we caught the EU shorts during the London session live stream. Right here, simply using the 2022 model. This is Tuesday, where we also during London caught the longs for a 2-to-1. This was during the PM session, so we didn't do it on stream. But right here, let's use a optimum trade entry tool. ICT Fib retracement. We hit the 61.8 retracement to the tick. The optimum trade entry comes in a little bit higher, lining up with the 15-minute bearish fair value gap right here. So there are more targets to the upside, that's for sure. It just depends on what the DXY wants to do. This doesn't look to me like capitulation, that it doesn't want to continue to go up higher. still looks bullish. Just give it some time to develop. Take your partials, make sure to get paid, and yeah, like I said, let it develop. Here on the hourly time frame, this was the entry with the market structure shift here on the hourly. Same way what we saw right here on the DXY. So you will see what I mean if I flip EU on its head. Daily bearish volume imbalance. Higher high, 1 hour market structure shift right here. Bearish fair value gap, order block. We missed the order block or the breaker block here on EU. But on DXY, if we go to our DXY chart, we perfectly hit that. Let me uninvert the chart and then we see that perfectly. Took the high market structure shift, this lowest long closing candle becoming our breaker block, overlapping perfectly with a bearish fair value gap. And then we saw the Asia accumulation, and once you see that Asia accumulation, I don't know, at least for me, it immediately pops up Asia accumulation. 3 session setup, 3 session power, 3 accumulation, manipulation, distribution. Okay, what do I have to back up this claim? Daily bearish fair value gap, 1 hour change in set of delivery, 1 hour bearish fair value gap at the optimum trade entry plus a breaker block. Plenty of sell side below. We are on Wednesday, Thursday. Likely have put in place the high of the week during Wednesday with very good probability if we think about weekly templates. And yeah, then you just risk it on the chance that your analysis is right. Hope that made sense. Okay, so we missed taking out the low of the day here on NQ. I'd expect the S to push back up as well. We're fine with that. We hit a 1.5 risk to reward. I'm simply gonna let this sit. I'm not gonna stream for the entire AM session. It's 10:50 now, so we entered the 10:50 to 11:10 macro. We will see what happens here. You guys know where my take profit target is, 4,380 for the funded accounts. For the other ones, for the funded accounts, I'm already at break even. With my take profit down here, I already took some partials at this area, make sure I get paid and not lose anything. For the challenge, like we spoke about already, it's a fixed 2-to-1. Play the probabilities. I know if we would have taken the 50% entry, it would have already been a 2-to-1, even a 2.5 risk to reward, but we take the low-hanging fruit entry because that's the edge, that's what I tested, that's what I'm trying to forward test. And yeah, I don't know, avoid being left behind if we don't hit the 50% level really. But that's all up to the individual trader. We just discussed that. Nice. Okay, perfect. H. Smith, well done. Let's go. Getting that payout. General chat, what do we have here? Well done, day trader. I'm also done for the day, or done for this AM session live stream. So if you have any last minute questions, feel free to ask me. Also on YouTube, I'll be getting to that right now. I really appreciate that. Let's go. Take a look at Bookmap. Liquidity at 4,400, liquidity below. More liquidity below, I don't know. Bookmap is cool and all, there's a reason why I'm not using it anymore. Awesome. Awesome, awesome, awesome. All right, guys, let's see if we get any last minute questions in here on Discord. Thank you. I'm glad you learned something. That's why I spend this time here on the Discord server every day. It's really fun for me. I enjoy teaching, explaining things, and yeah, hope to see you around on the Discord or on the free YouTube New York session live stream. And yeah, if you want to join the VIP membership to also get access to the ICT Indicator, to the London session live streams, and all the other stuff that we have going with the accumulation zone, feel free to check out the WOP link in the description. Over the weekend or Friday, I will release a Black Friday sale, so stay tuned for that. And yeah, I'll be back tomorrow. Tomorrow is already Friday. Far out, that goes by so quick. But anyway, I really enjoyed today's session. Let's see if we hit our take profit target. And other than that, don't really have much more to say other than enjoy the rest of your day. And I will see you tomorrow. Alright guys, bye.